There, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for and also tell you about the stocks that you need to keep on your radar today. So let's get started with an eye on the globe and see how the markets fared on Wall Street. Now, it was a reversal session on Wall Street with technology stocks leading a late-day sell-off as investor sentiment cooled off ahead of Federal Reserve's upcoming interest rate decision. Now, earlier in the day, that is yesterday, strong third quarter results and upbeat guidance from Nvidia that helped lift the Dow nearly 700 points and pushed the S&P 500 up as much as 1.9%. But that momentum did not last. In fact, Nvidia's rally faded and the stock ultimately closed down more than 3%, putting it on pace for its worst month since March. By the close, the Dow ended about 386 points lower. The S&P 500 dropped more than 1.5%, whereas the Nasdaq that slipped nearly 2%. Bitcoin that also fell to its weakest level since late April. Now, adding to the pressure on Wall Street was long delayed jobs data that showed stronger than expected September hiring, though the unemployment rate that came in surprisingly weak, complicating the outlook for the labor market. Now, with that report, traders are continuing to see only about a 40% chance of another rate cut in December. So yes, a reversal trend is what we saw on Wall Street, and for the week, major indexes remain on track for losses. However, the S&P 500 is down nearly 3%. The Dow is off about 3%, whereas the Nasdaq has shed more than 3.5%. Yet some investors view yesterday's dip as a normal breather after years of a strong run. So let's watch out for how the week ends. But for now, they're on track for losses, Srishti.
All right, that's about the Wall Street check. But when it comes to the crude oil front, oil is set for the weekly loss, as we have seen oil falling for the third straight session. Is WTI crude futures that fell towards that $58 per barrel mark, wherein there's some bit of a pressure when it comes to the Brent oil prices as well. It's Zelensky that signaled willingness to pursue the peace talks. Because of that, we have seen a bit of a pressure coming in on the crude oil front just yesterday, and that continues today as well. But when it comes to the gold and the silver prices, there we are seeing a bit of a movement, though gold is trading with a cut of almost 0.5% as we speak right now, but it's silver that has fallen amid easing rate cut bets. So let's watch out for these data points as well.
That's right. So that's about the commodity check as well as Wall Street check. But let's move on and get you some latest global stories that we are picking up this morning. First up, America's long delayed September jobs report has finally landed, and it surprised to the upside. Non-farm payrolls data rose about 119,000. That's far above expectations, even as August was revised to a loss. But unemployment that ticked up to 4.4%. That's the highest since 2021, and adding to the nuance to the picture. Now, wage growth that cooled to 0.2% on a month-on-month basis. Now, this data ends a 44-day shutdown-induced blackout, with economists warning these numbers reflect conditions 2 months ago, not today's labor market data. But yes, so that's about the data. In fact, we also caught up with experts to decode these numbers, and let's listen in to what they had to say.
These are early days, but I have a feeling with AI, you will have a delinking between GDP and labor. So, for example, you will have a situation where the need for employment will go down, but the GDP, because of productivity boost that AI can give you, that per capita GDP goes up. So you'll have a situation, maybe the US is actually reflecting that, where you, as the panelists mentioned, that you had the Atlanta Fed nowcast GDP, though it is for a slightly backward looking, but it's still tracking 4% plus. And the weakness in the job market in the US is been there for, I think, more than a year. We've been hearing the tech sector layoffs happening, even the non-farm payrolls. The kind of revision that happens to the backward data, it shows the labor market was weakening for a while. It just, the data didn't show it. Even the current release, you had a downward revision for the previous 2 months. So I wouldn't really read too much into the September print, because most likely once we get October, November prints, which will be released together, again, the September print is most likely to be revised downwards.
First, we have to recognize, of course, it's old data and that the jobs data in general are seen as lagging indicators. But also, there's volatility month to month, and so I think that it's helpful to take a look at what the last 3 months were, and it looks like it's about 62,000, a 3-month average. And that, while you say it's coming in a little bit better than people expected, it's true in the short run. But that 62,000 average is about a half of what it was a year ago. And so I think that the general idea, the image would be an economy that's slow to hire and slow to fire. The rise in the unemployment rate, though, I think you're right too that that's really the headline. But the reason that it rose looks like it's because the participation rate increased. That is, perhaps in September, that the recently graduated college people come into the labor market. Participation rate might go up on a seasonal factor, driven.
All right, let's move on and let's tell you some of the other global stories that we are tracking. And first up, about the Nvidia earnings, because after soaring 5% on the earnings optimism, Nvidia shares flipped and the AI giant ended nearly 3% lower as investors questioned the valuations across the sector. Now, Jensen Huang pushed back against AI bubble fears, saying that the fundamentals remain strong. The results initially lifted AMD, Broadcom and power suppliers like Eaton before the wider market sell-off dragged the entire AI basket into the red.
Well, let's keep it with the AI space. Now, Ray Dalio says that the AI boom is definitely a bubble, but not a sell signal yet. In an interview, the Bridgewater founder warns that assets in bubble territory historically deliver very low returns over the next decade, even if prices keep rising in the short term. He says that the bubble won't burst without a trigger, not tighter policy, but possibly wealth taxes, and advises investors to diversify into havens like gold, which is hitting record highs.
And Bitcoin has slumped to its lowest level since April, briefly dropping below that $86,400 mark as investors cut the risk and reassess the odds of a Fed rate cut next month. Now, strong U.S. jobs data pushed the December cut probabilities down to about 40%, triggering a broad crypto sell-off. Now, the retreat continues a month-long unwind after October's leveraged liquidations, with Bitcoin also dragging equities lower as AI-heavy traders pull back across both rates.
Next up, Fed official Anna Paulson says that she's taking a cautious approach into the December FOMC meeting, warning that each rate cut brings policy closer to shifting from restraining the economy to actively stimulating it. Now, Paulson said that the bar for additional cuts is rising, even as she remains more worried about labor market softness than inflation.
And bond traders are zeroing in Japan's stimulus plans, bracing for heavier selling in the midsection of the yield curve. Now, while ultra-long bonds remain the prime shorts target, investors are now probing to 5 to 10-year belly for the signs of strain as Prime Minister Sanae Takaichi prepares to unveil a mega supplementary budget. Now, a bigger than comfortable package, risk pushing yields higher as traders position for increased supply.
Moving on to Japan's macros, inflation is back on the boil. Core CPI rose to a 3-month high of 3% in October, marking the 43rd straight month above the Bank of Japan's 2% target. Now, the data strengthens the case for further rate hikes, even as the economy loses steam. Now, GDP contracted about 0.4% in the month of September, in the September quarter, that is, or 1.8% on an annualized basis, underscoring how Japan is squeezed between persistent inflation and weakening growth.
On the other hand, Japan's exports surged past expectations in October, rising 3.6% year-on-year against forecasts of just 1.1%. Now, shipments to Asia and Europe drove the upside, though growth moderated slightly from September's 4.2%. Imports also surprised, climbing 0.7% instead of the expected decline.
Moving on, Walmart beat expectations on revenue and earnings and raised its full-year outlook for the second straight quarter. Strong e-commerce growth and a surge in value-seeking shoppers across income groups powered the gains. The net sales are now expected to rise up to 5.1%, with EPS guidance nudged higher. Now, the report comes ahead of a leadership transition as U.S. Chief John Furner prepares to take over from longtime CEO Doug McMillon in February.
India and Israel signed the terms of reference for negotiations for a free trade agreement as the Union Minister of Commerce and Industry Piyush Goyal announced that the two countries have decided to enter into negotiations for FTA. He underlined that the two nations have unlimited possibilities and potential to expand economic engagement. Let's go across and listen in.
Congratulations to my dear friend, my brother, Minister Neer Barkat, on this very historic occasion. Israel and India have decided to enter into negotiations for a free trade agreement soon after having executed a bilateral investment treaty, and collectively the bilateral investment treaty and the free trade agreement will open the doors to greater market access, flow of capital, investments and trade, both in goods and services, remove obstacles to doing business, provide clarity, predictability and stability to our economic engagement, and clearly Israel and India as two strategic partners with deep-rooted friendship and a mutual respect for each other are destined to bigger achievements and greater friendship.
All right, so that's the latest on India and Israel ties. But moving on, new age company executives have made a blockbuster entry into $1 million CXO club in FY25. That's according to an analysis of the BSE 200 companies by executive research firm EMA Partners India. Now, they captured 4 out of 10 slots in the $1 million CXO list. Shivani Garath, my colleague, is here to take us through all the details.
Now, big money is no longer just for the old guard. In FY25, new age CXOs stormed right into India's elite $1 million club, bagging 4 of the top 10 spots. Their pay packages, in fact, swelled. Total CXO compensation jumped 36%, surging to a whopping 7,025 crore rupees. So who's leading the charge? Well, it's Policy Bazaar's co-founder, Yashish Dahiya, as you can see, with a jaw-dropping 641.32 crore rupees in compensation. That included 638.35 crore in exercise stock options. His co-founder also made it to the list. His co-founder and executive vice chairman, Alok Bansal, as you can see, was third with a 247.98 crore rupees in compensations. That included ESOPs. Now, Swiggy's done well too. 2 of its top executives, including co-founder Sriharsha Majety, made the list, along with Lakshmi Nandan Reddy Obul, whole-time director and head of innovation at Swiggy, at 6th position with a total compensation of 90.28 crore rupees, 88.33 crore from ESOPs. And Sriharsha Majety, who's a co-founder and group CEO of Swiggy, at 9th with a total compensation of 76.61 crore rupees, 74.75 crore from ESOP. So what's driving this entire pay bonanza? Boards are now rewarding founders not just for the vision but for operational performance as well. Additionally, several founder or promoter-led companies also, particularly in the new age and digital consumer retail sectors, went public this year. Going forward, with a number of startups planning IPOs, it's likely that several in their top management will make an entry into this particular elite $1 million club, especially through ESOP's valuation going forward.
All right, but for this, viewers, it's time now to step into a very short break in this edition of Market Cafe. Don't go anywhere. We'll be right back with more on the other side.
Morgan Stanley says that they are increasing their FY26 pre-sales guidance to 27,000 crore for the full year FY26 versus 26,000 earlier, implying nearly 60% growth on a year-on-year basis. As far as their margin assumptions are concerned, that now stands at 35% for the full year FY26. This is based on the 38% margin that they reported in the first half of this year. So very positive report that has come in on Prestige Estates from Morgan Stanley. They've raised the target price to 2,000 and they are maintaining their overweight stance. The second one is Indraprastha Gas, where they are maintaining equal weight. Target price earlier was 192. They have revised it to 202. They are lowering their volume estimates on account of muted volume growth that the company had reported in the first half of the year. But they are maintaining their margin assumption at 5.7 rupees per SCM, and they are revising their capex estimates. So for the period FY26 to FY30, their capex estimates has now been revised from 7,600 crores to 6,900 crores. But all in all, they've raised their target price to 202 from 192 earlier. So both these stocks, Indraprastha Gas and Prestige Estates, in focus on the back of this MS report.
All right, thank you so much, Ashesha, for getting us all those details. So let's watch out for both of these counters in today's trading session. But let's shift focus to some anchor lock-in expiry. A total of 95 companies are slated to have their pre-listing shareholder lock-ins, lifting amounting to the value of $30 billion between 17 November to 26 February 2026. But what does it mean for the recently listed companies? Let me take it across to my colleague Mitali, who joins in with more details. Mitali.
Right, so between November and February 2026, as many as 95 companies are scheduled to set their pre-shareholder lock-ins expire for this month, and unlocking shares worth a massive $30 billion. Now, it's important to note that not all of these unlocked shares will actually hit the market. A significant portion of this chunk actually continues to be held by the promoters and the promoters group, who typically do not sell immediately. But even so, these unlockings can create supply pressure and are closely watched by the investors. Now let's take a look at the major upcoming lock-in expiries. For 25th of November, coming week, we have Go Digit General Insurance, a sizable 20% unlock worth $742 million. Also coming up is NTPC Green, the biggest one of the season, with a massive 69% of outstanding shares unlocking, amounting to a whopping $6.5 billion. Also, starting December, we have Office Space Solutions to look for to 20% of its shares will be unlocking, followed by Okla India. Also, for 8th of December, we have multiple expiries unlocking, and we have Skoda Tubes with followed by Aegis Vopak. Also, Pine Labs and Lenskart Solutions, which will be seeing 2% of its share unlock and a notable of $184 million in values. Also, Billion Brains Garage Ventures is also lined up with 2% valued at $232 million, and another unlock for Pine Labs, also followed by Urban Company with 3% valued at $66 million. And for the 16th of December, we have Shringar House of Mangal Sutra seeing 4% of unlocking around $9 million. So these unlocks will be closely monitored, particularly for the companies where a high percentage of outstanding shares are coming out of the lock-in, as they have the potential to influence the short-term stock sentiment.
Ali, for that update. But before we let you go, now Shriram Finance has outperformed the benchmarks for over a year. Now, what's driving this growth and how stable is the asset quality? Help us analyze all of these questions, Mitali.
Right, so Shriram Finance has significantly outperformed the broader markets across the time frames. If you see the year-to-date performance, the stock is up around 42% compared to 10% for Nifty and around 8% for the financial Nifty. Also, if you see an on-year basis, Shriram is up 45%, again beating its benchmarks. Since October 1st, that is less than 2 months, it has gained around 27% against the Nifty and Nifty Financial Services. Now let's have a look like what is behind the growth drivers and how is this strong outperformance being led. So the company is seeing stronger growth momentum across its lending segments, and a supportive macro environment, likely rate cuts, are also helping the sentiments to boost, along with the asset quality, which is said to be stable and is improving, which actually is boosting the consumers' confidence. And also the profitability stands to remain healthy, supported by consistent ROA delivery. Now finally, reasonable valuations are also aiding up for the company's outperformance compared with the peers, have drawn the institutional interest. Now, if you see the guidance, so the company has guided for 16 to 17% of AUM growth for FY26, and so far the performance is tracking well. For Q2 FY26, we saw that the AUM grew around 15 to 16% year-on-year basis, and also in Q1, that figure came around 16.62% of growth. Disbursements were also seen up around 10.24% year-on-year basis, and growth continues to be led by the commercial vehicle segment, with gold and personal loans also contributing. Now, the management expects H2 FY26 AUM to grow around 2% higher than what they had achieved in H1. Now, the asset quality, let's have a glance at that. Asset quality remains stable with a clear improving trend. GNPA stands at 4.5% and NNPA stands at around 2.49% in Q2 FY26, and both these metrics have stand to improve compared to the previous quarter, especially if you see the elevated levels for Q2 and Q3 last year. Now, if you have a look at the margins and NIMs, we have that the margins stand to be a key monitorable for the company, and management had guided for the NIM improvement as the access liquidity normalizes. However, the improvement in Q2 was sub-delayed because of the persistent longer than expected, and the incremental cost of funds also stayed elevated at 8.07%, putting temporary pressure on the yields. Now, return on assets also, the management has guided the performance around above 3%, and the ROAs came for the Q2 at around 2.89%. In terms of valuations, if we see, the 1 year forward PBV has risen 1.8 times 6 months ago to 2.18 times currently. Now, this is above the company's 5-year average and also indicating a re-rating driven by the strong fundamentals. Also, we have heard about the MUFG deal updates from our sources, and a key recent trigger has been in news. So MUFG is reportedly in advanced talks to buy 20% stake in Shriram Finance, and the deal value is pegged at around 30,000 whopping crores. Management has acknowledged that some discussions are ongoing, adding to the positive sentiments around the stock. Also, if we see the brokerage stances, 34 analysts have a buy rating, while 4 recommend hold and only 1 has a sell call. So concluding overall, Shriram Finance continues to show strong growth, improving the asset quality, stable profitability, and these factors together explain the stock's strong outperformance throughout the year.
All right, thank you so much, Mithali, for getting us all those details. But with this, viewers, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team. Thank you so much for tuning in.
Across the region, that is after US tech stock lost ground overnight. That's also reflecting on the index. Japan's Nikkei is down 1.8% right now. Hong Kong's Hang Seng Index, that's also trading about 1.5% lower. On the other hand, China's Shanghai Index, that also is trading nearly 1% lower right now. If you talk about ASX 200, Australia's index, that's also trading in the red, down about 1.5% at that 8,435 level. South Korea's Kospi Index, that is in fact facing the most losses. It's down more than 3% right now, or 125 points at a 3,879 level. So yes, it's a red across the board for Asian indices. If we talk about Nifty, we did manage to end above that 26,190 level yesterday, but for now, in line with its Asian peers, it's reflecting a negative start is what we are expecting. The Nifty implied open suggests a downtick of about 45 points at open. So yes, that's how we are expecting the Nifty to open. It's supposed to open in the negative territory, tracking its Asian peers as well as the Wall Street.
All right, so that's about the Asia check, but let's also tell you how did the markets shop just yesterday, which were the key movers in terms of the sector performance and the stocks as well. Let me take it across to my colleague Snehi for the market wrap.
Well, yes, all in all, a very positive sensex expiry for the market. You had the Nifty that saw a 0.5% uptick to close just shy of the 26,200 mark. So was the case with sensex. About 0.6% higher is where the sensex was. But the highlight of the day was that Nifty was just about 60 points from touching or scaling its fresh all-time high level. So that was something that shaped up very well, although we receded from those highs very nominally. The broader of the market was absolutely flat. The advanced decline ratio was slightly in the favor of the decline, so that is what kept some pressure on the Nifty from touching its all-time high. But in terms of individual gainers and losers, the Bajaj twins, Eicher Motors, you have Reliance, Tech Mahindra, HDFC Bank that did well from the Nifty 50 group of stocks. On the flip side, some pressure continued on Asian Paints, HCL Tech and Titan. These were the top Nifty 50 losers. If you take a look at the sectoral moves, then it was a day of the Nifty auto stocks, about 0.5% uptick in that segment, led by Eicher, Hero Moto, Bajaj Auto, Ashok Leyland and some other names as well like Maruti and side. Then you had energy, Nifty Bank, then FMCG, IT and metal were absolutely on the flat line. But on the flip side, some pressure on Nifty Realty, Nifty Pharma and PSU Bank, that was the top sectoral loser, with all its constituents in the red, with names like PSB, IOB, PNB. All of these stocks were deep under pressure. Maharashtra Bank and Central Bank seeing cuts of anywhere between 2 and 2.5%. Lastly, if you take a look at some Nifty 500 top gainers and losers, on the winning side, Jaiprakash Power continued to gain a 6.5% uptick over there. Aztec Life Sciences also very strong 13% move. M&M Finance, Netweb Tech, Natco Pharma and IEX did well. On the flip side, from the losing end, Sun TV Network, ABLBL, that's Aditya Birla Lifestyle Brands, Intellect Design, Hyundai Motors, Biocon, Schneider Electric and City Union Bank were some of the top Nifty 500 lagats. So that is all in all how the expiry day, the sensex expiry day shaped up, and kissing distance away from the Nifty. Let's see if you're able to touch that all-time high.
All right, so it was a good day for D Street yesterday, but let's see how today's day pans out. And for that, Ashesha is here to take us through all the stocks that are going to be on the move today.
Well, yes, first up, let's talk about IT major TCS, because TCS and TPG have joined hands for AI data center play, where both companies collectively will be investing about $2 billion of equity, and the funds will be used to develop large-scale AI-ready data centers in India with over 1 gigawatt facility. So this is big news that has come in from TCS, where they are expanding their footprint into AI. So yes, TCS in focus on the back of that. Two big block deals that are likely to happen today. First up, Adani Wilmar. Remember, Adani Group already sold about 13% stake earlier this week, and now they are looking to sell stake worth about 2,500 crores, and they are looking to fully exit out of Adani Wilmar, largely in line with what they had guided for earlier. But this block deal is likely to happen today. Max Financial, meanwhile, where Max Ventures is looking to sell 0.46% stake. This is in the price band of 1693 to 1676 rupees per share, implying a discount of 1% as compared to yesterday's closing price, and the total offer size is likely to stand at about 271 odd crores. Reliance Industries, meanwhile, they have made an important clarification to the exchanges, where they have said that they have stopped buying Russian oil for processing at its only for export refinery from the 20th of November. There has been a lot of controversy when it comes to purchasing Russian oil, so now they've made a clarification, but this is only for its export only refinery. So keep an eye out on this counter as well. Zaggle Prepaid, meanwhile, they have entered into an agreement with Biba Fashion to provide its Zaggle Zoya platform. This will be for a period of 36 months. And lastly, JSW Energy, where company's resolution plan for Raigarh Champa Rail Refinery has now been approved by the COC. The final clearance, of course, is pending for NCLT approval. But yes, this stock also in focus on the back of this.
All right, thank you so much, Ashesha, for getting us all those details. But let's also tell you which are some of the other counters that we will be watching out for. And first up, Alkem Labs will be in focus, as the company has said that they have launched a probiotic in India for the gut health. So that's the market that they are exploring at this point in time. So positive news flow coming in for Alkem Labs. HG Infra will be in focus, as the company has incorporated a wholly owned subsidiary, that is HG Clean Energy Solar Green Hydrogen Battery Energy Storage, and that is why the stock will be in focus. They are definitely exploring the solar, green hydrogen and the battery space. So let's watch out for this particular counter. PVR will be in focus as well, as the company has come out with their plans to add more screens, and they plan to add almost 100 screens in FY26, and looking at tier 3 markets with affordable pricing is what we are getting to understand. Kotak Mahindra Bank will be in focus as well, because the board will mull the stock split today. Today we have that board meet coming up for Kotak Mahindra Bank, so that stock will be in focus. And along with that, grow, one of the counters that have become very volatile of late, one of the recently listed counters as well. This stock will be in focus as the company will report its first ever results on the bourses and for the stock exchanges. And yes, of course, the stock is down 15% in the last 2 trading sessions. So let's watch out for all the action when it comes to grow.
All right, then. Lots of stocks to watch out for. But with that, it's time now to take a very short break. We'll be right back with more news and updates on the other side.
Remained unchanged from a year earlier. The index of 8 core industries was unchanged from October 2024. This is according to the data released by the Commerce and Industry Ministry. And this is but the slowest pace for the 8 core industries since August 2024. So the slowest pace in 14 months. Now, if we look at the 8 industries, refinery products index rose 4.6%. Electricity index declined 7.6%. The pace of steel output quickened 6.7%, while coal slowed 8.5%. Crude oil output slowed 1.2%. Natural gas contracted 5%. The pace of cement output rose 5.3%, while fertilizers quickened 7.4%.
All right, thank you so much for getting us all those details. But RBI Governor Sanjay Malhotra attributed the recent rupee slump to the tariff feud between India and US. He also expressed optimism on the trade deal between the two nations soon. Let's go across and listen in.
So the recent depreciation that you have seen is because on the trade side, you have seen that there are some tariffs, some additional penal tariffs, as a result of which expectations have built up that our trade deficit may go down. Now, whether it will happen or not, because a lot of it depends on expectations, and that is one. Exports did come down, as you are aware, in the month of October, so it's to do with current accounts. Similarly, on the capital account, you are seeing that the flows this time round, and that's been the case, right? So somewhat muted, as a result of which. But we are quite confident that there will be a good trade deal, hopefully, going forward, and that should relieve whatever pressure has been there on our current account. We have very good buffers of foreign exchange, 690 billion US dollars, and so that's not a matter of concern.
All right, so that's the word coming from RBI. But moving on, Tata Consultancy Services has announced a strategic partnership with global alternative asset management firm TPG to accelerate the growth of its AI data center business, Hypervault. Now, this collaboration marks a significant step in TCS's AI ambition. Anurag Joshi is back with us to get more details on this story. Let's listen into him.
TCS has secured a $1 billion investment from private equity firm TPG to boost its AI data center business. TCS strategic partnership with TPG will boost the growth of the AI data center business called Hypervault. The investment will support Hypervault's GW scale AI-ready infrastructure build, and the partnership is, according to TCS, is a significant milestone in its ambition to become the largest AI-led tech services company. TCS Hypervault will be funded through equity investment from both TPG and TCS and also debt. Both partners combined have committed to invest up to 18,000 crore over the next few years. TPG of this will invest 8,820 crore rupees, that's $1 billion, to have a stake between 27.5% to 49% in Hypervault. And bringing in this investment from TPG as a strategic investment partner will drive returns to the shareholders of TCS. The company said in a statement, this funding of TPG is through TPG Rise Climate and its Global South initiative. Additionally, TPG is also partnering through its Asia real estate business.
All right, thank you so much for getting us all those details. But with this, let's also listen into what TCS management said post Q2 earnings on their future investments in an exclusive conversation with ET Now.
The voluntary separation or separation of employees is not led by AI, but AI is causing a lot of stir or the disruption to the entire model of manpower hiring, which is there. How do you see that going forward?
In terms of cost perspective?
Cost perspective.
So, as we talked about it at the beginning of our conversation, a lot of investments which we are making will be in talent, right? We'd be hiring differently enabled high-skilled talent. We have been spending a lot on reskilling, and we'll continue to spend.
All right, then let's keep it with the Tata Group. Now, Tata's Starbucks ambitious India expansion plans may have entered the slow lane. Now, the company had once set a target of one new store every 72 hours, but the actual pace currently stands at one new outlet in 6 days. So what's really brewing at Starbucks? Anjali Palod is here with the report.
Starbucks Global CEO Brian Nicole, on his latest visit to India, reaffirmed the coffee chain's commitment towards India. The last time that his predecessor was here, they set an ambitious target to open 1,000 stores by 2028 in India. But if you look at the pace of the expansion since then, this does not live up to the huge expectations that were set. Now, to reach this 1,000 store target, they needed to open one store every 3 days. So let's look at what has happened since then. Tata Starbucks closed FY25 by adding 58 new stores, which was a pace wherein they which averages at 14 to 15 stores every quarter, roughly about one in every 6 days. This is already half the pace what they had set out for. Now, if you look at FY26, this pace has further slowed down. In the first quarter of FY26, they added only 6 stores, and in second quarter, 7 stores. Now the tally is at 500 with the opening of the Starbucks Reserve store in Delhi this week. That will take that tally to 500. If we look at 2028 as the target for 1,000 stores, which means they're still looking at opening 500 more stores in the next quarters, which would mean 50 new stores every quarter compared to 6 to 7 that they're doing right now. And if we compare to the 14 to 15 that they were doing in FY25, they will still need to pick this pace up by 3 to 4 times, which makes it seem very unlikely that Tata Starbucks will be able to achieve this. Now, at the same time, if you look at the revenue and loss figures, this is FY25 wherein the revenue grew by 5%, but the losses further widened 65% year on year. And the CFO for Tata Consumer Products said that this was on the back of the expansion plans. Now, we've already seen the pace of expansion slow down, and if the 1,000 store target still remains intact, that would mean a huge pickup on investments in Tata Starbucks from TCPL as well as Starbucks company, the joint venture of which is Tata Starbucks. But this comes on the back of heavy losses being borne by TCPL as well. So it would be interesting to see where the strategy for Tata Starbucks will go from here.
All right, thank you so much, Anjali, for getting us all those details. But now, one of the key takeaways of Karnataka's new startup policy is that the state is looking beyond Bangalore towards building its next big push in the startup space. In an exclusive chat with ET Now, the state's IT Secretary N. Manjula told ET Now that towns like Mysore, Hubballi and Dharwad were on the government's radar, while sectors like semiconductor and deep tech would stay in focus. Here's a slice of that conversation.
Karnataka is, and more so Bangalore is a startup capital of the world, we can say. So we have more than 18,000 startups coming from Karnataka. And then this is a startup policy, 2530 is a second version. That means we already had one policy before, and there's a lot of learning which has gone into it. And now the government is strategically focusing beyond Bangalore. So we have already identified 6 potential clusters, and of which in 2 phases we are taking them up. And then the first phase will be majorly concentrating on Mysore, Hubli Dharwad region and Mangalore region. Apart from that, we'll eventually follow it with Kalburgi, Shimoga and Tumkur regions also, because all of these are potential areas. So the startups already we have more than 5,000 or 6,000 startups, emanating from these areas. So the focus now is to also push them further by building a similar ecosystem which we have in Bangalore beyond Bangalore areas. Right. So that's why, as you mentioned, the 7-pillared approach, the strategy which we have devised, starting from the nurturing, that is the student entrepreneurship onwards, up to the stage of market access and funding them. That is the approach which we have taken up. Right. So there'll be a lot of incubators, accelerators, centers of excellences, etc., which will be parallelly, built up to support this initiative. Right. So we are confident that the next generation entrepreneurs will be supported through this initiative. 25,000 in the whole state is the minimum we are expecting, and then at least 10,000 coming from the in the neighborhood of Bangalore.
Absolutely, and very admirable, no doubt, that these numbers are something that you hope to achieve, and especially with significance to outside Bengaluru in these clusters that you mentioned. But if I were to ask you, what exactly will be the focus areas for you from a sectoral point of view? I know for a fact that Bengaluru has had its key core areas in tech, deep tech as well. Space tech is another area too. But going forward, even as you expand the volumes of startups that you hope to nurture out of Karnataka and outside Bengaluru, which are the key focus areas for you that could play into this plan?
Yeah, rightly said. Bangalore, of course, is like multi-sectoral in that sense, because we have a lot of academic institutions which can handhold and nurture and even the industry partners who are there to nurture. Whereas beyond Bangalore, I think certain clusters have inherently their own advantage. For example, Bangalore is very advanced in fintech. The first banks came out of Bangalore. Likewise, Mysore, for the semiconductors, manufacturing and design sector, there is a big potential that they have already shown. Likewise.
All right, so that's the Karnataka IT Secretary. But on that note, we'll take a very short break. We'll be right back with more on the other side.